Ladies and gentlemen, good day and welcome to the Heidelbergcement India Limited Q3 FY22 call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Thank you, Aman, and good afternoon, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the Q3 FY22 call of Heidelbergcement India Limited. On the call, we have with us Mr. Jamshed Naval Cooper, Managing Director, and Mr. Anil Sharma, Chief Financial Officer at Heidelbergcement India Limited. I would like to mention on behalf of Heidelbergcement India Limited and its management that certain statements that may be made or discussed on this conference call may be forward-looking statements related to future developments and the current performance. These statements may be subject to a number of risks, uncertainties, and other important factors which may cause the actual developments and results to differ materially from the statements made. Heidelbergcement India Limited and the management of the company assumes no obligation to update or alter these forward-looking statements, whether as a result of new information or future events or otherwise. Also, Heidelbergcement India Limited has uploaded a copy of the Q3 FY22 presentation on the stock exchanges and its website. Participants may download their copy of the presentation from these websites. I will now hand over the floor to the management of Heidelbergcement India Limited for their opening remarks, which will follow by interactive Q&A. Thank you, and over to you, Cooper, sir.
Thank you, and good afternoon to everybody for your presence. Since you have downloaded all the presentations, I will run fast by this. Yes, this quarter indeed has been a very traumatic one for reasons of the cost increases which have been very severe, and the impact which had unprecedented impact we have seen in the month of this quarter was the low demand because of infrastructure low spending, and the market did not move to the expectation, and the double whammy was power and fuel. The fuel cost was through the roof. So we suffered, but yes, I think nothing to worry about it. So the volumes were down by 11%, the costs up by 13%. We could increase the price a little bit and got some 2% relief out of it, pass it on to the consumers. But given this current situation, I will talk to you later on also, but as of now, the quarter has been not a good one. I think this would be one of the rare ones which we have suffered. If I look at the other areas of our business on alternative fuels, we started on the ESG. So that is a very good thing to have happened to Heidelberg, that now today we are with running AFR, and the target is to run to about 8% to 9% of TSR we should reach as soon as possible. On our 5.5 megawatt solar power project and our sourcing of third power for 15 megawatt at Jhansi, I think this is all underway, and it should start triggering from this month onwards, or earliest by next month. Some of these should fructify. So there is a positive side to it. Share of green power is about 20% for us. We produce 100% blended, so we are fully covered from the ESG side. We are on a carbon footprint. We are far ahead on many of our colleagues in the industry. We operate on negative of working capital, so that is also the silver lining there. And on a net cash balance basis, we are about 181 crores of cash surplus. I have spoken to you about going to slide 4. You can see the picture of the WHR, the AFR plant which is in operation, and on the right hand side of the picture you can see that 5.5 solar for power. The projects are ready. Okay, as far as the AFR is continuously we are getting, but there can be some glitches here in AFR. Sometimes it happens because we are using bio waste. So sometimes it does not come or otherwise, but we are creating capacity to store about 4 to 5 days of stock of bio waste, so we can run this plant 100%. We have reached as high as TSRs of almost 9% of TSRs. On some days we are able to reach. That means the plant has proven its capability that it can deliver higher TSR, but it will take its time to stabilize. But 4% to 5% of TSR. We are guaranteeing that it will happen now. Coming to our environmental footprint, you are seeing on slide 5. This is a very unique activity which we have started somewhere in 2015, and now we are continuing. The target was to get an ambient temperature inside our plants to 2 degrees lower than what it exists 1 kilometer away from the plant. Very happy to say that earlier we were in the previous quarters we had clocked almost 1.6. Now we are at 1.7, so there is an improvement. And Jhansi, of course, we compare all the units together. So as a group, Heidelbergcement Group, India plant, which includes Zuari Cement plants also. The second unit among our India units is Jhansi, which has crossed 2.2 target. So we are very happy that Jhansi team has really worked to see that they are able to achieve a better work environment in their area of operations. On CSR initiatives, slide number 6, we are now making classrooms smart by putting boards in classrooms. So there is an obligation there on terms of CSR also. So AMSA at Ramasandra, we are giving school children kits, educational kits. Another which important part is on slide number 7. We had given a commitment to the government, to the local government, which is at Damo plant, to put up an OPD center. So we are creating this center under the CSR activities, which will be one of its kind, and it will be a very big respite to the people of Damo. So that investment we are making, and that is in the progress. Rural health checkups and other things are continuing as it is. Now coming to the basics of our business, which you are be waiting to hear, which is on slide number 8. If I look at, if I take exception month, which is exception quarter at December, and if I look at the 9 months, trailing 9 months, okay, we have had a volume growth of close to 11%, which I think we should appreciate more than getting bogged down with one quarter of bad quarter, which does not set any precedence, neither it sets any tone for the future. So this will come back from the clouds because we had this COVID. After COVID, we had this Omicron. So one after the other, and these fuel prices and the Baltic rates which are going up through the roof will cause a concern, and it will not end here. It may continue also, but let us focus more on the Indian domestic demand. Okay, how does it to stack up? I think the demand in India is going to come back, and it will remain strong. People have made good amount of money in the stock exchanges, in the retail investor. They should plow back again into the reality sector, and we should see again a boost in demand for housing. Coming to the reasons for decreased profitability, as I said, that the major area for us has been our fuel. There might be some where I will cover up in further also. The volumes, of course, took a hit. We took a hit on generation because when the volumes go down, we cannot produce electrical power. So almost in the quarter on quarter basis, if I look, almost 2 gigajoules of power we could not generate. We did generate almost 15 gigajoules of power in the December quarter. Now we could generate 13. So that adds up. All this adds up to it. Now this is the slide where I can spend a little, give you more details on slide number 10. You can see the power and fuel, how it has impacted us on a per ton basis of cement. Then comes the raw material. The raw material is also inclusive of our packing material. Okay, so the granule prices shot up significantly through the roof because of the TP prices that is baked into this. The other part is, when diesel prices go up, your transfer of clinker, which almost more than 50% of the clinker we transport from Damo to Jhansi. So that cost is baked into this. So this is where, we take our clinker transportation logistics cost also under the part of raw material because it is a raw material for another unit, and bags also come here. So these are the two factors which has led to this 167 rupees per ton increase in the impact on the EBITDA margin. Coming to the other things, I can think, this 47 rupees which is there, we can discuss if you have any points on this. There are 3-4 issues there which we have won. One was also the unseasonal times of I'll request Anil to dwell on all the 4 points of which are there. Maybe after my presentation you can dwell on all the 4 points which has led to this 47 rupees. But let me tell you, it is nothing but a matter of concern for us because there is some advertising costs and other things. Don't take it as an expenditure, take it as an investment. You will see the returns coming on in the long run. For this 47 will give us more returns in the long run. Interest bearing loans, you wanted to know. If you want to know, this is how it is. Now we are almost on net basis, we are debt free company. These loans which are interest free loans, these are bullet payments which will happen in period of till 26, and still we sit on cash. Coming to our the key points of our business, 45% of our volumes are moved by road. 60 where we have to reduce our pet coke. Earlier we were firing almost 70% pet coke. Now it is the total reverse. It is 69%, 70% has come to coal. You can see the difference in between pet coke and fuel. Cost of fuel, it is significantly higher. Pet coke is significantly high. But when we do this pet coke, when we reduce the pet coke, we have to increase our sweetener consumption also. So there is a negative impact on that count also. So all that gets, it is all linked one by one. Coming to our, high premium products, we are good at around 22%. We have clocked, I think this is a very reasonable figure to achieve. Between 25, if we reach 25 in a year or so, it is good enough. But at the moment, we are not pushing these products too much beyond a point. 77% is close to our trade sales. Non-trade took a beating and trade also took a beating. So there is a difference in little bit of realignment in the percentages. Earlier we had started clocking almost 85% of trade. So that has slipped a little bit. Our work, whatever work we do, gets also due recognition. So you can see the accolades which have come to us. We were awarded, recognized as the 3rd fastest growing cement company in medium category by the Indian Cement Review. So there is one of these awards. Under the CSR award, we got a silver category and 8th CSR Times Award for rural development. These are some pictures of our team. Our technical director and his team are receiving the award from Honorable Minister Mr. Prahlad Joshi. While we talk about ESG and other things, on energy we are very conservative. We are very focused extremely, and Jhansi has got the privilege, distinction I would say, of the 6th consecutive year being awarded as for the energy conservation. Going forward, coming to slide 16, we have seen the budget, the outlay has increased, improved, so we can hope that there will be something good for cement demand on this side. GDP is forecasted to grow better. IMF has already improved the rating from 8.5 to 9. So we should hope that GDP continues to grow, and then if GDP grows at 9, we should expect cement to be around 9, if not less, percent growth we should see. Third wave of the COVID is now, people are getting used to it. Life is getting back to normal, but let us not conclude that, the pandemic is over. One never knows what is around the corner hidden for us. Fuel costs almost doubled. Almost we have seen on a total of fuel is just gone through the roof. Very difficult times. But let us not be very hopeful that the fuel will come down to its yesteryear levels of when we saw pet coke at $48. It is not going to happen. At least in the foreseeable future, in a year or two, I don't see that happen. On power distribution, we are expecting that soon we might see some power tariffs going up. So we should be prepared. We are preparing for that, and that is why our team is working on renewable energy, third-party sourcing on power generation through solar power plants, and our EFR, if we can reduce, if we can improve output through our WHR also. So that will be our main focus areas. With another thing which I want to, before I conclude this, I want to add that, the cost pressures because of the fuel and everything is so much enormous that, cement cannot remain at this level now. Cement has to, the cement prices must, I think, they should go up. It is our constant endeavor. As Heidelbergcement India, I am telling my team that, we have to pass on the cost increases to the consumer. You cannot keep it with you because it is unfair to the shareholders, clearly. So every day we are trying to see that, that somewhere we can, take bites from here and there and improve our margins. So we have been increasing prices with very, very small, increases inches. We have done it in the month of February. In the month of January, minor, we tried it. We tried something, but we had to roll back. But we did take some benefit out of it. We increased by 5 rupees, rolled back it by 2 rupees, 3 rupees here and there. When the market did not absorb. But there is some gain which is gradually coming in. But the volume should now start coming in. That is major concern for us. On slide number 17, I want to mention that, we took a little bit an aggressive stand on our social media. This cost also is part of our other costs which you can see there. These are all, we are getting number of now more people are attached to us. We have revamped our website. This was the need of the hour. There are many customers who want to see us in better light. They had been recommending that, to improve, provide more information to them through social media and other things. So that is what we are trying to address their needs, because the new gen customers are more on social media and they are wanting to know about the company and about the products and about how they can, benefit from the company. So we are using these medias from our side. So this is all from my side. Very happy to answer your questions. Anil and my team, everybody is here to take your questions. If we have missed anything, we will definitely answer it to the best of our abilities. And we want to keep our business as transparent and clear as ever. We want to give to our investors a comfort that, we will tell you what it is. We will not try to do anything which is, and we want to remember our consistency in our business. So, but of course we cannot, you'll have to pardon us for any extraneous pressures which come because of demand and other things which we are not able to foresee sometimes or not able to manage. And it is not possible to manage either. So thank you once again for staying invested with us and giving us that sense of confidence in us and holding us in the right spirit. Thank you very much. And over to you, Weber.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Participants are requested to use handsets while asking a question. Anyone who has a question may press star and 1 at this time. First question is from Shravan Shah from Dolat Capital Markets. Please go ahead.
Yeah, thank you, sir. Sir, the simple basic questions is how do we now see the overall cost moving up in the fourth quarter? Can we see a further increase, because this time our raw material cost, including the change in inventory, is significantly increased QOQ. So that is one. So entire all the cost line items, how much we can see further increase? Second, on pricing front, last time we have said strongly that it will be increasing significantly prices every month. You have already given by November and December and January we will be seeing a 500 rupees per bag, which is not happening, as you said, that 5 rupees. Even the January hike you have taken a rollback of 2 to 3 rupees. So how do we see the pricing or the realization for us going forward? So net, the ultimate understanding Just trying to understand how do we see the EBITDA per ton in the next quarter? Can we see a significant improvement?
So, Shravan, just to answer you that, when I made this comment that we should see these high prices, it was, based on that with such high costs coming in, I think nobody will be able to keep the price with them, okay? They will have to pass it on to the consumers, but probably the industry was not able to pass for whatever reasons. I cannot say for others why they did not, because for me, there is a price elasticity. If I take a price increase of 10 rupees and if competition or the others don't take similar increases, there is a price parallelism which happens in the cement industry. The differences can be between competing brands depending on which brand level you are competing. The elasticity can be 5 to 7 rupees. Okay. Beyond that, you have to fold back again into the same thing. So I cannot tell you why the prices have not gone up. But today I am sure that everybody has exhausted in this industry, would have exhausted, I would suggest. So hope so that they would have exhausted their old low cost inventories. Okay, they're low cost materials, and now they must be having all materials which are inventory, which would be high priced. So there is no way, but the way is only one way through the tunnel. You can't go back into the tunnel. So now it will force you smoke you through the tunnel, and you'll have to come out of it, and you'll have to increase prices. Coming to quarter 4 on prices, I'm sure that prices should go up. These are the good demand months also. So there is no reason why the prices should not go up. We have seen good production in the third quarter. I think this inventory would have also piled up a little bit. January they would have been able to exhaust the inventories, and from February onwards the prices should move up. That's my feeling. Coming to your inventory costs of past and what is going forward, I think the prices will remain same. I think the costs will not come down significantly. Minor here and there, small things may happen, but not significant. Let us not give you any picture which is very nice or very good looking picture, or tell you anything which we do not expect it to happen.
Just to add with respect to cost part, I think we need to also understand that some of the costs like diesel prices, because of their transportation cost is higher, which resulted into higher fly ash cost. Then granular prices by the refineries, they have increased significantly during last 1 year, and packing cost because of that has increased between 30 to 40% during last quarter. With respect to our raw material prices, with respect to our fuel prices, this is the pure external things, and in the short to near term, we can say that that may continue. Maybe there will be some softening on account of petrol prices, which we have seen in the month of November or December, but cost will remain on that account in the coming 2-3 months. Now, with respect to this other expenditures, I think this expenditure per ton basis seems higher during the December quarter. But in absolute term, as compared to corresponding quarter of last year, it is slightly reduced. And there are two kind of costs we grouped under this other expenditure. Some of the expenditures are of fixed nature, either traveling or maybe our administrative costs, and some of the expenditures are variable nature, that is related to operations of the company, some of the handling costs, and some of the costs related to rates and taxes like limestone royalty and other things. So on increase or decrease of the cement production and the cement dispatch, cost may go down, which are the variable nature, but cost may also static if these are the fixed nature. During December quarter, after second wave, when the July, August, the COVID and or Delta wave actually start reducing, some of the activities which we have stopped during last 1 year, especially our dealer meets and the people who are going to market, those have been restricted or limited during last 1 year or 1.5 years. So during this Diwali and the month of December, we have started moving to market and started meeting with our networks. And also we have started doing some advertisement, especially digital media and wall painting. This wall painting and hoarding kind of things were almost stopped during last 16 to 18 months. From March 2020 to up to until August 2021. Some of the expenditure in other expenses are maybe of the fixed nature, but we have revamped and increased a little bit to sustain our market share in this AP and MP market. It seems on high side on per ton basis because of the lower volume, but I think going forward we will be back to the on same per ton basis on the other expenditures. Mr. Shah also has raised one point with respect to inventory. So, Mr. Shah, if you see our trend of the December quarter of 2020 or even in the past years, our inventory always decreased because in the month of November, December, we took plant shutdown of our kiln so that we should be ready with our production capability and efficiency when the peak season starts from the month of January. This year also we have done same thing. If you compare our inventory decrease amount or the trend of the inventory decrease amount with the December 2020, you will find that same trend happen. Yes, as compared to September, our inventory increased, and that we do in order to have the inventory post-festive season. So that time we try to increase as on 30th September. In December, we try to reduce our inventory by taking this shutdown. So these are the development, and those are the very natural development happen in the December quarter, and always you'll find the December quarter this kind of shutdown happens.
Thank you. The last question is in terms of the volume for fourth quarter, can we see a YOY growth in the fourth quarter? And the two data points, what's the net debt? You have mentioned 1811 million, but what's the gross debt and gross cash, and how much capex we have done till now?
So if I were last, as far as the cement is going on, last quarter we did 1.25 million. Okay, so we are working on that we should at least be there.
And on the capex side, our capex, we have taken normal sustainable capex, which is almost 35 to 40% of our annual depreciation. That amount is in the range of 500 million INR, 50 crore rupees for this fiscal year. And during 21-22 fiscal year, we have taken two projects related to sustainability. One is this our alternative fuel project. Total investment we did for this project is 16 crore rupees in 2 years. So in the fiscal year 21 also we have incurred half of the amount, and then the remaining amount we incurred till December. So that is the total amount of 6 to 7 crore rupees came during the current year. And then we also invested the capex for our solar power plant. So during fiscal year 21-22, our total capex will be in the range of 75 crore rupees. Out of that, we have incurred almost 55 crore rupees in 9 months, and balance we will do in the remaining 3 months.
Sir, lastly, cash and gross debt number, gross cash and gross debt.
So we will show the gross cash balance also in the March balance sheet. The total amount which is we can say net debt level is higher as compared to September quarter. September quarter, our net cash balance was around 1 billion, which increased to 1.8 billion at this moment, and this is happening on account of better working capital optimization. And during this quarter, we have repaid our 1.2 billion total loan. If you see this one of our slides in our presentation, there you will find the total bank balance also, which is 4.1 billion. So total 415 crore rupees is the gross cash and bank balance.
Thank you. Anyone who has question may press star and 1. Next question is from Rajesh Ravi from HDFC Securities. Please go ahead.
Hi sir, my question pertains to the scenario in the central market with multiple players entering that market, UltraTech expanding capacities, even ACC and JK Cement would be increasing their capacities next year. What is the sense on the market, and where is Heidelberg position in terms of its capex, capacity expansions and volume growth visibility?
Okay, Rajesh, we, as you said, that in March of 20, we debottlenecked and added almost close to 1 million tons. Okay, we will be adding a little more quantities in the next few quarters, also in 22, 23 by debottlenecking. Right now we are operating at 73% capacity utilization for the quarter. We have got enough headroom right now, so we will not lose market share. If that is the question, if that is the answer to it, yes, we will not lose market share. Growing capacities in this particular market in central region, it is not possible as of now, because after this debottlenecking we will add about another 500,000 tons max, and then we will have to sustain this. To sustain market share as a company, to retain its market share, we are looking at a greenfield project which is in Gujarat, on which we are working as of now. So the competition, in terms of competition, yes, competition has increased, but ultimately we have to learn to live with competition. Everybody has to live in a world of competitive environment. We are not concerned about the environment, because today also, when the capacities are coming up, we have enough headroom for today to also, and I think every cement company has the same. Everybody is operating around 70% in central India. But luckily, in central India, if I look at it, in quite a few months, we operate close to about 82% also.
Okay. And this greenfield expansion, any timelines by when you would start groundbreaking, or any by when this project would be day of light?
So Rajesh, we are working with the government to get us approvals for environmental clearances and things like that, which is regularly being monitored month after month. It takes about a year and a half to get the environmental clearances. Once that comes to us, then we will do the further work on this. So we have kept some amount of capex will happen sometimes in 2023. We hope to start something in 23 if everything goes right.
Okay, so 23 you would plan to, if the AC is achieved, after that, this being a greenfield, another 3 years before this could be operational?
3 years.
3 years. So FY23 plus 3, FY26 somewhere.
You can speed up the project. It is not that you cannot speed up the project, but ultimately once the clearance comes, you can put up a plant in 24 months also.
Correct. And so primarily in North Central market, you would peak out at with 0.5 million ton incremental capacity enhancement. This is clinker, you said, right?
Yeah, this is cement basically.
Okay. Any clinker debottlenecking also you are working on, sir?
Yeah, that will add up to it, because we already have enough now grinding capability we have. So we have to now augment only clinker.
Okay.
So that is on line 3 we are working on cooler.
Okay. And on the merger of Zuari, or the amalgamation of Zuari, any thought on that, sir?
So the group has given guidelines on those. We are working on it. It will happen. It will take time.
Okay. Great, sir. Thank you. I'll come back in queue.
Thank you.
Thank you. Anyone who has a question may press star and 1. Next question is from Utkarsh Nopani from Haitong. Please go ahead.
Yeah, hi. Good afternoon, sir. Sir, my first question is again on market share. So if we see, we have increased our capacity, say from 5.3 million ton to 6.3 million ton through debottlenecking around 1.5 to 2 years back. But still our sales volume is down by 4.5% on a 3-year CAGR basis, whereas our major peers have posted positive volume growth over the same period despite no increase in their cement capacity. And what we are observing that few new players have entered into the central region, and they have been able to successfully ramp up their capacity over the last 2 to 3 years period. So, sir, can you please help us understand what is the reason for the same?
I don't know where you are saying the ramp up capacities. The only player which operates in this out of the plant is Prism Cement. Okay, so I have not seen that they have ramped up their volumes anywhere. Okay, yes, there are other companies which are bringing cement from other towns, other cities. They might have been selling more. So it is not an apple to apple comparison, I would say. And all said and done, during the COVID period, everybody has lost volumes here and there. If you are an all India player and if you are posting an all India higher volumes, that does not apply to us in Central India. But Central India demand is close to about 48 million tons of capacity, which is about 50 to 53, around that much. It is happening, and most of the cement which is being produced also in Central India is finding its way out of Central India.
Okay.
So that is not, that it is not disturbing the equilibrium. Ultimately, there will be some minor 0.5% here and there, one quarter or next quarter can happen. But if I look at my last 5 years of data, we have not lost market share.
Okay. And sir, considering that a lot of new capacity is likely to come up in central region over the next 2 years, so wanted a sense from you that by when we can expect our existing capacity to be ramped up to earlier level of 90% rate?
93%, it is just only a matter of demand. Today also, if I look at it, last month also, our plants had operated close to about 80 to 83% capacity utilization. So, it's a question of demand. If we get the demand, we will pump the material, not an issue.
Oh, okay. And sir, can you please provide the detail of capacity expansion plan for Zuari Cement, say over the next 3 to 4 years from here?
Zuari plant?
Yes, sir, Zuari Cement.
Zuari I cannot provide here. That is not a listed firm.
Okay. And sir, what is the reason for sharp increase in other expense in December quarter? Was there any one-off included in other expense?
Well, as I said, there was nothing as such.
Mr. Nopani, what we have explained that this expenditure, some of the expenditure are of the fixed nature. If you see the total expenditure is compared to corresponding quarter of last year, it has not increased in the absolute term. Yes, on per ton basis, there is increase of around 60-70. And there are 3-4 elements actually what we have done on the regular nature in December quarter. Those things we could not do during last 18 months because of the COVID. One of that thing was our dealer meet, then the wall painting. During this quarter, we have started our digital advertisement also. And again, because of the relaxation by the government, the movement of the people have started, so some of the traveling and other expenditure also has incurred during this quarter. So those are the regular nature of expenditure, but when we compare with the corresponding quarter of last year or the September quarter, some of the expenditures have increased during December quarter, and it will be normalized maybe in coming months.
Okay, thanks a lot, sir, and all the best.
Thank you. Anyone who has a question may press star and 1. Next question is from Sanjay Nandi from Ratnabali Investment Private Limited. Please go ahead.
Yeah, good afternoon, sir. So just a few questions from my side. So what is the current clinker utilization for this third quarter?
This clinker factor is close to about 61.5.
61.5%, right, sir?
Yeah.
And what has been the clinker to cement conversion ratio, sir?
Clinker capacity utilization.
Yeah, clinker capacity utilization.
You want clinker utilization? Clinker utilization was 73.
73%.
73.
And what has been the 73? And what has been the clinker to cement conversion ratio? If you can.
That's what I mentioned. This clinker factor was, we absorb almost close to about 34.5% of fly ash.
So clinker incorporation, clinker factor is 61.5.
61.5 clinker factor, right? Okay.
Yes.
Okay. And sir, did we take any price hike in the first month of this quarter? Like January is already over, so most of the companies are taking.
There were no price hike. As I said that around sometime in around 20th we tried attempting some price changes. We did some change on 7th of the month. Then we did something on 15th, 14th, 15th of the month, but with small pieces. Some of them were successful, some of them were non-successful.
Okay. So do you plan any kind of price hikes, sir, going forward from the month of February, as you said,
Yeah,
sir?
we are increasing now. We are increasing every Monday some price or the other in the market. Somewhere in small pockets wherever we are seeing that there is a demand is coming up. So we are increasing prices, but it is in a very small, but that will be permanent increases. We are not wanting to give a price and then take it back and then roll back the prices. That does not give a good feature to the trading community. Trading community requires the stability of prices. They require consistent prices.
Got it, sir. So in this quarter also, we could find that we have taken some improvement in the relation we could see, like in the quarter 3 compared to quarter 2 of this year. So does it happen because of that mix of changing in our mix, or it's something the improvement in the relation?
It is basically the market prices. We have to take the prices up. Otherwise, you have seen our cost has gone up by 13%. We have increased the prices only by 2%. I wish we could have passed on the entire 13% and we would have been smiling our way in front of you.
So you mean to say our mix is overall same, right, in this particular quarter?
Yeah, I think that's almost same.
We only deal with in one product, so there is no change in the product. It remains the PPC, and you have also seen that our trade sales is in the range of 75 to 80%, so that remain also same. So there is no much change in the mix of the product, or no change for the sector.
Got it, sir. So that's it now from my side, sir. Thank you so much. Wish you all the very best, sir, in the coming quarter.
Thank you. Next question is from Roshan Paunikar from JM Financial. Please go ahead.
Yeah, hi. Good afternoon to the management. Sir,
Roshan, request you to be a bit loud, please. Not audible clearly.
Yeah. Am I audible now?
Yes.
Yeah, please.
Yeah. So, sir, basically my question is regarding the price hike. So, you mentioned that we tried to increase the prices by about 5 rupees, and then we saw some rollback. So, my question is, why is there a resistance, or there's an inability to pass on the cost increases? Because costs have risen materially, and the rollbacks to the price hikes have been happening. So, is it because of the influx in the product from some other regions, or has there been any slowdown in demand in any of the segments that we cater to?
So, Roshan, see, in cement, there is a price elasticity between times. Okay, so you can go to you can stretch to a certain extent. Then when you see your sales, and then it has to be also supported little bit by demand. Okay, so that means if the demand is good, the price hikes will come better. Okay, the price hikes will come faster also. But sometimes when we do these type of things, when the demands are not supportive, and I normally will tell my team that itna cost बढ़ गया, अभी pass on करो. So they may go ahead and increase the prices by 4 or 5 rupees, and then 3 days they don't able to sell. If it's demand, then they come back and say, so we can roll it back. Now, if the demand was supposed to be good, then this will get absorbed within 3 days or 4 days. Nobody will question it, and it will go through. So it's a question of supply demand. I cannot say that I cannot take. Cement prices are something which are known to every industry person in competition. It's very highly competitive. If I increase my prices, I'm sure my competitor would know about it within a matter of minutes. And if I drop the prices, they would also know it probably within a matter of seconds. Because price drops are conveyed by sales team faster than the price increases. So this is our dilemma which we live through. So if competition also probably acts in that direction, if the direction is there, then probably the price hike will come faster. If competitor has enough material with them and they don't increase prices, they are comfortable in their comfort zone, the prices will not go up. I am only waiting for that February should look little better now. After the harsh winters are getting over, it should start looking better now.
Right. So, is there any slowdown in the demand in the rural side of things? Because that's what we've been hearing
There is a slowdown in demand, no doubt about it.
Okay. And second question is on the Gujarat expansion, sir. So you mentioned and you've given some timelines as well. Just one question on that. When will we, start the land acquisition, or have we already started it?
As I said, till the time I get the environmental clearance, we will not put any capex there.
Thank you. Next question is from Rakesh Vyas from HDFC Mutual Fund. Please go ahead.
Yeah, hi sir, good afternoon. Couple of questions from my side. First one is on the fuel, essentially. Almost 70% of coal, and I'm presuming that most of it is domestic coal. What we are now seeing is that incrementally e-auction prices are actually continuing to go up month on month. So in that context, compared to 3Q numbers, are we likely to see increased cost pressure on fuel side going forward into next 3 to 6 months? Or we are fairly confident that the worst of the fuel cost inflation is behind us?
You want me to answer? Okay. So answering this question of yours, you have the fuel on an international basis, this does not look to be very pleasant. So we should not expect any downside on this, but that prices would come down. It should, even if it remains at this price, we should be okay with it.
But just to get more clarity, sir, I presume a large part of this coal purchases are also through e-auction in domestic side. So I'm just trying to understand, are the prices higher compared to what we have been purchasing in recent past, even now?
Yeah, prices are on the higher side.
Okay. So second question is related to the demand, and you just indicated rural demand seems to be slowing down. But I'm just coming from the point that UP is going through election phase, and generally we have seen demand slackness during such time period. So is this demand slackness largely you will attribute more to the ongoing elections, or you are seeing this weakness in demand even in your other markets like MP, etc., which would generally then reflect a general slowdown in the demand per se?
So, Rajesh, the demand in UP will slow down during the times of election because most of the labor contracts is not available. Contract labor is not available. They go for electioning campaigns, they get some 500 rupees per day sitting doing nothing, and so the labor gets diverted, and farm labor, it's getting difficult now to get construction labor at sites as elections get stiffer and stiffer. Once this gets over and the harvest, now then they will go for harvest. Okay, so that is the time of March will come. Only this period will come when there will be a harvesting period. So it will be a mixed weather for mixed, what should I say, feeling for cement demand is concerned. But government spendings will go up because they have to spend their budgets, so that March becomes a very good month for government spending to come up. So whether elections or not elections in the month of March, in terms of demand in Madhya Pradesh, I think it is mostly impacted because of cold weather. Okay,
no.
That will.
So just last point on this one, given that demand still doesn't seem to be bouncing back to the earlier levels of last year, etc., how confident we should be as an industry to pass on this cost inflation that we are seeing currently? Because as I'm reading from what you are saying, the cost per se is not likely to come down materially in next 3 to 6 months. And therefore, the only way to improve profitability is largely through these price increases. So, in the slow demand environment, how should we look at?
There is an option today. If my fuel cost and everything is the coal is the same, the petcoke supply is the same, the cost to every company is the same. Okay, if I am able to operate my kiln at 3 gigajoule, others will also be able to operate at 3 gigajoule. So the cost advantage is not there with anybody. Everybody will have to, one fine morning wake up and say, we have now enough is enough. Now it is the water has touched, our nose is going below the water. We have to increase prices. That's it.
Fair point, sir. Point well taken. Thank you so much and best of luck, sir.
Thank you.
Thank you. Next question is from Mudit Agarwal from IIFL Securities. Please go ahead.
Hello, good afternoon, sir. Sir, my question is related to the realization. Like despite reduction in the trade mix, our realization has improved. So just want to know what is the price difference between trade and non-trade in our market?
Because right now it is, the last quarter we have seen differences about 700 rupees.
Okay. And so the realization improvement is largely driven by price hike taken in the month of October. Am I correct?
Yes, you're right.
Okay. And the second question is, sir, on the fuel side. Sir, what is the per 1000 kcal cost of domestic coal versus imported coal or petcoke?
I can tell you for gigajoule cost for coal right now coal is costing somewhere around 9,200 odd, and petcoke on the same side is about 20,500 odd. It translates into 2.6 gig per gigajoule would be petcoke, and 1.95 almost 2 rupees will be coal per gigajoule.
Coal is the domestic coal, correct?
Yeah, coal is cheaper. That's why you're thinking that 70% we have switched over. But see again, it's a technical process. If you reduce total coal, petcoke also, it will have an impact on quality matters. Okay, then the other costs are there. We have to look at other costs also. Grindability costs, and all those things come into play. So we have to mix and blend. We have to look at how do we create a recipe based on the final product cost.
Okay, understood. Thank you, sir. That's it from my side.
Thank you. Next question is from Nishant Bagrecha from InCred Capital. Please go ahead.
Yeah, hi. Good afternoon, sir. I think most of my questions have been answered. Just 2-3 data points. So what was the power mix in terms of grid power, thermal power, and green power? I mean, the grid and non-grid during the quarter.
Green power was about 20% in the quarter.
Grid power?
Green power.
Grid power and non-grid.
Grid and non-grid you're talking about.
Non-grid is 32%. And the grid is 68%. So almost you can say 1/3 is the outside power and 2/3 is from the state grid.
Okay. And secondly, if I missed out, if you have mentioned what type of coal inventory you normally have and what is it currently, if you can just highlight on that.
Normally it is about 25 to 30 days.
25 to 30 days. Okay. And lastly, what was the lead distance during the quarter?
Lead is about 350 odd. Yeah, 350 odd. Yeah.
Okay. Same as last quarter. Okay.
350. You can take it.
Okay. Thank you, sir.
Thank you. Next question is from Uttam Kumar Srimal from Axis Securities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Sir, my question relates to your volume guidance for FY23. So what kind of volume guidance that can you give for FY23, seeing the current demand situation?
Little difficult question you have asked. Although we have made a very aggressive plan for the calendar year 22 to 20 and for the financial year 23 also. It's right now, I am not able to comment very clearly because the January month was, like I would say, I was expecting January should, blast, but it did not happen. But February seems to be okay. Hopefully, let's see.
Okay, and sir, hello?
10% to 9% to 9%, as I said, if GDP is going at 9%, I think 9% is a safe bet to believe that 9% the industry will do.
Okay. And sir, this quarter our trade sale has come down to 77% because last quarter it was around 83%.
So what was the basic reason, sir, for coming down the trade sale? Because of lower volume, or we have to sold more in non-trade sales?
No, in total lower volume, there was a volume took a beating. So you have to, when the retail goes down, you have to fall back on non-trade. But
okay, that's all from my side. Okay. Thank you, sir.
Yeah.
Thank you. Anyone who has a question may press star and 1. Please note this is a final reminder for question, and no further reminders will be placed after this. Next question is from Peter Agnell from Shekhan Wealth Management. Please go ahead.
Hello, good afternoon, sir. Sir, just to know, what is the current production capacity and what can we expect it to be in the FY23 and FY24?
Current capacity is 6.25 million tons for us. And we have we hope that we should be able to operate at close to about 80% utilization. Fine.
Okay. And the new capacities which is expected through debottling in the next 2 years also will be in that range only, or
around that way.
It will be. Sir, then finally, sir, the demand you mentioned about demand and input cost pressure this quarter. You have explained in detail, but just in one line, do you think this is likely to persist for how many more quarters?
What? I did not get your question.
Sir, you have elaborated of low demand and input cost pressure faced by you and the cement industry. Okay. So this particular trend, how many more quarters do you think will drag on?
Okay. Because I think the cost pressures will remain as of now. I don't think they will ease out. At least in the another coming next 6 months to 8 months, I don't see any relief from this cost pressure.
And sir, so this again qualitatively, sir, every budget has a push on infrastructure. So this particular has been ambitious of this, most famously the 25,000 kilometers highway and other such road-related infra. This usually is a demand driver for cement industry. But a few months back, some people from the ministry in Delhi have made statements like the cement industry is cartelizing and we don't like it, so we may not favor it. So should we? Is this? So will the cement industry get a good benefit out of these high road infra projects, or not as much, sir?
I think it is very unfortunate that everybody says cement cartel. It's very unfortunate. Okay. Today you look at my cement prices. Average cement prices in some of the markets are at prices which were running in 2015 and 16. Okay, there is no inflation in cement prices. Where is today cement has been selling in Bhopal at 320 rupees for the last 5-6 years. Where is it? If that would have been there, today cement should be selling at 500 plus bag. No? It's very unfortunate that people talk about this industry so ill about it, but I don't think this industry deserves, after having put in such huge amount of capexes and things like that. I would say that cement should. It is my endeavor to see to it that you look at you are invested in our company. What were the margins 20 years back? EBITDA margins were 20 years back, and today what are they? If they are cartelization, then this margin should have been sold up. No? Somebody should do the industry advocacy properly.
Thank you. Due to time constraints, we'll be taking our last question from the line of Kamlesh Pamgar from Prabhudas Lilladher. Please go ahead.
Yes, sir. So, just referring to the last quarter's call, we were very upbeat that we will increase the prices by 50-60 odd rupees. But what we see, and even not for particular for the quarter, because it would be impacted by the rainfalls, festive season. But even if we see Jan, Feb, till to yesterday, the prices are yet not picked up in your key markets, like say Lucknow, Kanpur, or Bhopal market. So, what are the reasons for that?
Yes, prices, incremental prices are smaller. They are not visible on the surface, but if you look at the retail selling prices on a ground level, there is marginal improvement. So, news media will never tell you that, the prices have increased by 2 rupees or 5 rupees, okay? They want to hear news of it where in Tamil Nadu price goes up by 70 rupees. God alone knows how can 70 rupees go up. I don't know, in one day and you go to buy a cement at 70 rupees, it will not sell. So, but media requires this sort of impetus, so you don't get to come to know. But if you will see the balance sheets of the company, then they will start showing results slow and steadily.
No, sir. We don't refer to the media news. So I was say, even if we see the last quarter, we had seen hardly around 1.8% quarter-over-quarter movement or increase in the realization. And even if we see this particular month or quarter, the increase would not be more than even 1 to 2% quarter-over-quarter. And given the fact that the way the cost is increasing, so where is the issue, sir? Because even if we see last 3 years, the way the realizations have moved for us, that has been hardly around 1 to 2% as against the inflation of roughly around 10 to 12%.
So this is the case with the played with this excess capacity.
Contrary to that, margins in North market has improved, Gujarat market has improved, West has improved. And given the fact that the way our capacities, our market is balanced in terms of market,
you must also appreciate that the realizations in central India 3 years back, prior to that, used to be the most stable ones. So now, and the rest of the market adjoining regions were languishing at much lower prices. When the NSRs here were, realizations here were about 3,300. In neighboring places, they were less than 2,500. So they have made up a little bit. Central India has not been able to move up because of large ingress of materials which have started coming from the neighboring states.
So then by that logic, can we infer that these margins will not move beyond, in best case, 900 rupees per ton?
It is a relative term. Okay, when people get better margins in their home markets, they won't like to come here because for them these are very distant markets. So when they stop coming to these markets, these prices will look up.
Okay. Great, sir. Thanks a lot.
You have to wait for that. But anyway, nevertheless, you have to be in as a Heidelbergcement wants to be. It wants to be in a premium product category. It wants its price to be in the A category price segment. It wants to sell at a volume which is reasonably priced, and it gets a good return on its investment. So that is our thesis, the fundamentals on which we work. That's why you see our non-trade factor is very low. We don't want to burn money. Ultimately, one fine morning, it is not going to help the industry, neither us, neither the investor.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the floor back to Mr. Vaibhav Agarwal for closing comments. Thank you, and over to you, sir.
Yeah, thank you, Aman. On behalf of PhillipCapital India Private Limited, we'd like to thank the manager of Heidelbergcement for the call and many thanks for joining the call. Thank you very much, sir. Aman, you may now conclude the call. Thank you.
Thank you very much. Ladies and gentlemen, on behalf of PhillipCapital India Private Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines. Thank you.